Good morning everybody, hope you're doing okay. In this video I am going to do it's going to be a bit of a longer one, to be honest. I'm going to break down my trades from last week, review last week. We're going to walk through price action and see what happened. I'm going to break down what I'm looking for this coming week, and I am going to go into a little bit more depth, to be honest. I kind of feel like I'm a little bit conscious that if the videos are too long, people won't want to watch, or they'll switch off. But at the end of the day, I think that people that want to watch and take value from it will stick around and watch, and the people that are just flicking through videos will just keep going. So I'm just not gonna, and I think sometimes I rush through it and people don't really know what I'm looking at when I do my analysis, because I'm just flying through it, trying to get to the end, or trying not to make the video too long. So I'm going to talk about a little bit of everything. So not this last week, but the week before, I was trying to catch this pullback. I was trying to catch this up in here, and ended up taking too many losses. Took 1, 2 or maybe 3 losses trying to go short in here, and also took once we started to go short here, I was looking at this thinking, well, maybe I got it completely wrong and we're bullish and this is an inducement, and then tried to go long in here and got taken out there as well. So I did not have the greatest week the week before, just because I was anticipating this pullback and I was trying to get in too early, basically, which is easy to see in hindsight. But at the time, obviously in hindsight, we can see that we were from this strong low to this weak high. We took out this internal, and then we came for this external. So we see the range played out nicely, and then we got the pullback. So I was just trying to get in a bit too early, really, and got a bit chewed up in here. So it wasn't the best week the week before. But at the end of the week, not this last week just gone, but the week before, we started to set up for these shorts. So it started to give me a lot more confirmation that I was right to look for the pullback, but I was just wrong on my entries. So this week was a lot easier for me, because I knew there was a good chance that we were just going to continue bearish to come and take out this, and obviously come and fill some of this imbalance to the left. So I had a lot easier week this week, really. So the idea was, if I was bearish, I'm just going to follow these ranges. I'm just going to follow the ranges, and keep going, really. Follow this range from here to here, or now we're in a bigger range actually from here to here. So this got taken into something up here, and then maybe we drop, but we'll get into that. But the idea was that we just follow these bearish ranges, and keep trying to short it, keep trying to catch this pullback until our target's reached. So that's kind of what I did this week. So coming into the start of the week, let's go on to the 15 minute. I do want to talk about the difference between higher time frames and lower time frames, because although I caught these wins, here, I took them off this short, sorry, I took off the 30 minute. So I took this whole, let's just bring it back to here, because this is getting a bit messy. So I took this whole block right here as price came in. This was the inducement, and then I took this short as we come into this 30 minute block. And I caught a nice trade. I caught a 2.3 R trade, which is, it's not a bad trade. It's not a bad risk to reward. It's just, can you do better? And I took this long. So the reason I took this long is because, let's go to the 15. The reason I took this long is because I believed this was going to be an inducement. Because look, during Asia, we came up and we broke structure right here. So we broke structure. So I'm looking for this 30 minute block to get mitigated, to look for my shorts. but at this point when I woke up and price was down here, I was like, okay, well, if this is an inducement and this is my POI and I'm looking for these shorts, then this is my target right now, because this is where I'm predicting price to go. And you can see that we had a strong low, we had a weak high. I mean, this is the bigger range from here to here, but this is also a strong low on the lower time frames. And you know, we came into this 15-minute block, and then we pushed up after creating this inducement, just like this bearish range where this is the inducement. In this bullish range, it's getting messy, one sec. Yeah, just like this bearish range on the 15-minute where this is the inducement right here, inside of this range from here to here, this is the inducement. So we had the inducement inducing buyers into the market, we take them out, we mitigate this block, and then we push up and we come and take external of this. So that is why I took the longs. They're not the greatest risk to reward, not the greatest risk to reward, but you know, at the time when I woke up, this was my target, so that's what I took. So that's what I took, and then I took these shorts from I actually took it as we tapped in here, but yeah, I actually took it when we tapped in here, but I moved it over here just to make it tidier. So, but if I was a bit more patient and I had a bit more time at the charts, you know, I want to see the potential. Like because I like the lower time frames, and I want to get better at it, and I want to build the confidence in it. You know, we came into this 15-minute block, and overall we're bearish, targeting external range liquidity. You know, if you were on the 1 minute, for example, if you were on the 1 minute, let's just go back to here. Oh. So you're on the 1 minute, you tap into this block, and then you come down and you break this 15-minute structure, and then you're on the 1 minute. So you've broken structure. So you have to ask yourself, where are you right now? Not like, not like where's price heading in an hour's time and 2 hours time. Where are you right now? You know, we've come in from this block, we're bearish overall, we've taken 15 minutes, we've broken structure on the 15-minute. So now we have this range, right? We have this range from this high to this low, and inside of that range, let me just tidy this up. Keep that there, but let's just move it over. Where are we right now? So on the 1 minute, this is our range. Hold on one sec. Okay, so we just ran liquidity. We haven't got any confirmation, we haven't confirmed the range yet, but look, we've ran liquidity and then we've broken structure right there. So we have a range, a strong high, a weak low. Where's our internal? Right there. There's our internal liquidity. Keeping in mind that we're going with the overall bias that we're bearish, we're inside this 15-minute range, we're coming from this 15-minute POI, we've broken structure on the 15-minute, we've got a lot more confirmation to go short than we did when I took that 30-minute block. So, you know, we can go long to target it, because that's the range, right? We go for internal, then we come for external. So if this is where I am currently, and we've just broken structure, then my target is internal range liquidity. And then once we take out internal, I switch from bullish to bearish. So we've just broken structure. Let's see if we can catch some longs. Let's go long. Let's go long right here, as we came in to mitigate that. Let's keep stops right there. Not the best risk to reward, but we're targeting internal because we've broken structure, and now we're expecting this low to hold until we take out internal. So now we've had an even bigger break, and it doesn't really give us more entries for, yeah, so this is we'll go long right here. we go long right here, stops below there, 2 pips. Now I know I don't trade 2 pip stops, but it doesn't mean it can't be done. Look, targeting this high, you know, if you weren't worried about losing and you just took the strategy for what it is, you know, if we're bullish targeting this, then strong lows should hold. So whether you take this in reality or not is irrelevant. It's kind of, you know, this is a strong low, it should hold until we reach the target. Look, this is a strong low right there. This is a strong low. It's a free candle formation. Get this out of the way. It's a free candle formation. It should hold, right? And it did. And obviously I wouldn't take that trade because it's so close to TP. But you know, that is the potential. You know, this is a strong low, weak high. We're just following these ranges until the target is reached. And you could take this you know, you could take this. Whether you have the confidence to do it or not is one thing, but you could take that. You know, you could take that because that was our target at that time, was internal range liquidity. Anyway, I'm just showing the potential. You know, if you have the confidence, if you build that confidence in it, which, you know, I don't particularly have the confidence to be taking that, but I'd like to build that confidence, you know, to do that. So I like to look and see the potential of it. But anyway, so now we're looking for shorts. So we go short once price comes in and mitigates this. We go short in here, stops above the high, and then we target this low. This is the safe target because this is the current range that we're in. We've just taken out internal, so now we're anticipating that price comes and takes out this external range liquidity here. So this is the safe target, but also keeping in mind that if you want to be a little bit more, you know, I don't see, like, I do kind of feel like if you're holding this past this low and you've got 6R on the table, you're taking more risk than you should be. So I think you should probably get out here. But in theory, you know, where are we? We've come into this, we're in this range, strong high, weak low. We're in this 15-minute block. We've had confirmation that we're going bearish. We're inside of the pullback, and we are trading this smaller range. So in the bigger picture, we are targeting this low down here. So you could target this low and you could get a 15R out of it. Whether you would or not, or whether you should, I don't know, because I kind of feel like if you're down here and you've got 6 or 7R on the table, you should be taking the profit, really, because, you know, once we take this low, not to say this high is going to get taken, but once we take this low, what could happen is we build up liquidity here, and then we take this low and you're 7R on the table, and then price comes back and you're only 2R on the table, and then we drop. It's whether you want to take that risk or not, to be honest. Anyway, I don't want to drag it out, but I think we can learn a lot from this. So yeah, you could target this if you wanted to be a little more risky, or you could target this if you wanted to be a little bit safer. So anyway, price goes to target, and hits that. So I got a 2.3. You could have had lower time frame, you could have had a 6.7, or you could have had a 15, but yeah, I didn't get that. I got this piece of shit. Sorry. No, it wasn't. It was alright. It's not bad. You can't. It's better than a loss, right? So yeah, I got that. So that was Monday. That was good. I was pleased with that. And then took a couple of others. I took this long. Now this was it was a good trade, but I think the overall plan was wrong. Like, I was looking for this strong low, weak high. I was thinking this could be an inducement. So I was thinking maybe we could come all the way up here and take this. But this is what I mean. Like when I said about over here, when I talked about you know, getting out, the difference between getting out here and then getting out here is like, if I'd have been 6R up and then that I would have got the bigger picture wrong, then I would have lost that 6R and probably 1R as well. So, and this kind of proves my point a little bit. It's like I won on this range right here and closed out at 4R, but I lost. I would have lost if I'd have been targeting this range. I would have lost on the bigger range. So yeah, I closed out at external. I got 4R profit, and then price just reversed and would have took me out. So yeah, just a good example that you should probably just, the safer option would be just to trade the range that you're in. But you know, if sometimes I suppose if you're in good profits and you're happy with the week, and this is just a trade that you're in which is running nicely, and you're not too worried about maybe taking a break even on it, then yeah, I mean maybe you could hold it up to here, but it is the riskier option really. So yeah, took a win here. I won't go too deep into it, but that was the idea, is that we come and take out this, but like I say, got out at the safe stop, which got me the win rather than a loss or a break even. And then this trade, this was a really nice trade. I don't know if it was in the best place to take shorts, to be honest with you, because it was kind of, where am I? Because we'd taken out this liquidity over here, we could have started pulling back to these areas up here. So I don't think it was the best. I don't think it was the best trade to be taken, but it looked pretty good at the time, so I took it. And I also took one on GU at the same time. So I was in sort of 0.5% risk on both, but yeah, it played out nicely. I mean, what I was looking at was that we had this imbalance fill price action right here. So we had a range from this high to this low. Price came and mitigated this, took out external. We had a range from this high to this low. Price came and took out, sorry, that was wrong. We had a range from this high to this low. Price came and took out internal range liquidity and then pushed down, and we failed to take out this high, but this was the one that ran liquidity and then broke structure. So I'm looking at this green range from here to here, and then inside of that green range, because I'm still bearish inside of this range from here to here, and we haven't taken the low yet. We've taken out internal, but we've created a range inside of a range. So we took out this, it ran this liquidity, and then we broke structure. So this is the range that I'm playing in, and inside of this range, if we just go a little bit, let's go back a little bit. Let's go back to here. Let's go to the 1 minute. Actually, no, let's stay on the 5 minute, because I think that's what I took it on. Yep, so this is my range. 1 sec. Just put that on charge. Yeah, so this is my range. This is an unmitigated 5 minute block. This is liquidity inside of the range. My idea was that we come and mitigate this block, we take out the liquidity, and then we drop and take out external. And yeah, it's probably one of the best trades I've taken this week actually. So we messed about for 15-20 minutes, and then we started to drop. Yeah, and just moved nicely. Now, it's what I mean by lower time frames. If you get the direction right, it just flows. I mean, look, if we go to the 1 minute, you know, and you're in this 5 minute block, that's your POI. That's where you're expecting. That's where you're expecting price to push from. Then, you know, we ran liquidity here, and then we broke, well, we had this range here, and then price pushed up, took this high by probably a pip, and then we started dropping, and we got this break right here. You know, as price come back into mitigate, this is a strong high, so as price came back into mitigate this could have been your entry right there. right there, stops above here, because this is the strong high and we're bearish overall, so this should hold. So if you build the confidence, you know, you can take that. Would I take it? Probably not, but in the future I'd like to just take this, not worry about the risk, not worry about losing the trade, just take it for what it is. You know, this is the strategy. If we're bearish, strong highs should hold, so we take this short, come and take, and then tap and do this. And this is how people that are really good, you know, I'm not talking about like these scammers online you see that just fake results. I'm talking about people that do stuff behind closed doors that people don't see. They're not showing it to the world. This is how they do it. They have the confidence to take this, and they catch these trades. You know, they catch that trade. Look at that. It's just a beautiful trade, because it's given them the confirmation from here. It's given them enough confirmation. They have the confidence and the psychology to take the loss if it comes, you know. And I think that's the key, and that's what I want to build. And I want to be taking these, you know. I want to be taking them, but yeah, I'm not quite there yet, but I'm getting closer. And yeah, I want to be catching this. I mean, this is a good trade. This is a good trade, but I want to be catching this. And yeah. Yeah, look how it pushed. Beautiful, really. But you know, I caught this one, which is still pretty good. Still pretty good. But you could have taken it from here. See this 1 minute imbalance right there, that we built an inducement. We built an inducement right here. We broke structure. You know, everybody's short. Everybody's thinking shorts because we've broken structure. Price comes back into here, and then we just nick the high, mitigate this block, and then we drop. So you could have taken it from there. So this is what I mean. It's not all, you know, there's logic behind all of these moves. You know, you can break it down and make logical sense of it. It's just, I don't know. I think it's just whether you have the confidence to take it in the whether you have the confidence to take it, you know. And I think prop firms don't. Oh, it's getting a bit deep now, but I think prop firms don't help with taking losses, because you do have a set drawdown with, you know, and if you're risking 0.5%, you know you've got 20 losses, and you've got 20 losses before you lose the account. Whereas if you had a personal account and you were risking 0.5%, you know, you have 200 losses before you lose the account. So I think when we do take a loss, we take it a bit more to heart, because we know we're just one step closer to losing the account. And yeah, I mean, what I'm planning on doing is just trade it. I would like to trade like this when I get a bit more time. I want to trade like this with really low risk, you know, maybe put like £1,000 in an account and just trade £10 a trade, and just, you know, build that confidence, build that. I want to take the wins, take the losses, and see if I can make it profitable, you know, and just build the confidence up like that, and build build that confidence to be able to take these trades and not worry about taking the losses, you know, knowing that overall, you know, after the week's done or after the month's done, I'm in profit. And who knows, because I could get to the point where I take these trades, and yeah, I take 1 hour losses here and there, but then I catch these 8-9 hour trades, you know, in the space of 10-15 minutes. It's not impossible. I think it just takes a lot of confidence, I think. But yeah, anyway, I won't keep banging on about that. But I know it's been a bit of a longer one. So where are we? I probably won't do my weekly analysis on this video, actually. I think I'll just leave it with a sort of review and like a walkthrough price action for last week, and then I'll do a separate video with my weekly analysis. But let's do GU. GU was not in this, but I'll talk you through why I was looking at this. Yeah, GU was, I took a loss on GU. I'm not too sure where, actually, but I know I took a loss on it. let's talk about the trade. That now GU wasn't the best trade, to be honest, just because similar to EU, where we took out this liquidity, you know, where we took out this, because I was in this pink range from this high to this low, and we've just taken external range liquidity, so I shouldn't be looking for more sales really. I should be looking for buyers to come and take out internal. So it wasn't the best trade, but it played out, and EU and GU were both setting up at the same time, and I was like, yeah, they both look good to short, so I took them both. Yeah. Let's just go to, let's replay this. I'll try and break this down quickly. 5 minute. So, you know, it's not just about the range, it's about order flow. Look, this was the range from this high. We came in to mitigate. We came in to mitigate this block. We pushed down. We came to mitigate. Look, this is the candle that did the damage. We pushed down. We came back to mitigate. You know, we built this inducement. We broke structure. We had a range from this high to this low that we pushed down. We came back to mitigate this block right here. Came back to mitigate this block. We pushed down. I think if we go lower, let me just get rid of that for a sec. So yeah, keep in mind that we've mitigated this. This is the last unmitigated area. This is the one that ran liquidity and broke structure. So keep this. So we're currently in these green dots. I think if we drop down to the 1 minute. So this was the candle that ran the liquidity. This is internal range liquidity right here. This is the imbalance fill price action. This is the candle that ran the liquidity. So following order flow, price pushed down, came back to mitigate. Now I didn't get a great entry, but once we took out this low, because we came into this block, we broke structure, we came back up, we mitigated this block right here, we mitigated this candle right here, and then we started dropping. So I was like, okay, maybe I didn't get the right entry, but it's good enough for me to take. So I took it once we took out this low, and then we just started dropping. And you know, all the way through this trade, I mean, yeah, it took its time, didn't quite move as quick as GU, but let's just go through it. So if we're bearish now, okay, we've had confirmation that we're going bearish. Forget that we're in this short. You know, we've had confirmation that we're in this bearish. You know, what are the rules? If we're bearish, strong highs should be respected and should be respected. And all we're looking to do is trade these bearish ranges until the target's reached. So look, we have a strong high. It's a free candle formation. It ran liquidity and broke structure. We have a strong high here, imbalance fill price action. What happens? Look, we've got a strong high, we've got a run of liquidity, we've got a break of structure, we have a weak low. What did price do? Price pushed up, mitigated this block. This is probably internal on the lower time frames, and then we pushed down and we took external range liquidity. So look, now we're trading with inside of this range from here to here. What did price do? Price pushed up, mitigated this, right, and then we dropped and we took out external range liquidity. But what did it leave behind? Look, let me just go into this a little bit more. 1 second. Right, so we yeah, so we took out this low. We took out this low right here. We came back. We mitigated this block right here, and then we pushed down and we took out external of this range. But what did it leave behind? Liquidity, imbalance fill price action into this 1 minute block, which is the 1 minute block that mitigated this block. So this is following order flow, you know, order flow is just a series of mitigations. So look, this came in to mitigate this. This was unmitigated. So what did price do? It built liquidity above it. I mean, whether you catch this at the time or not, who knows? But you know, this is what happened. So as price built that liquidity, price comes back into it. Right there, price comes back into it, and then look, once it's mitigated, what happens? This is the candle that mitigated. Look, price drops, breaks structure, mitigated, perfect short from here, perfect short from there, trusting that this is going to hold because following order flow, we've mitigated this. This is the candle that ran this liquidity, broke structure, we came back to mitigate, perfect short from here, and then we drop to come and take out external of this bigger range. And it's just a good example of how fractal the market is. You know, we have there's ranges everywhere. The market is fractal, so the ranges are fractal. And you know how we just build up the liquidity, come and take it out. You know, build up the liquidity right above this block, follow an order flow. You know, the series of mitigations. Anyway, this has probably been quite a long video, but I think it should help, or maybe open people's eyes. Certainly opens mine. You know, I'm not perfect, but I like to try and learn from, you know, I like to try and learn and see how I can improve, and I know how I want to be trading. You know, this is how I want to be trading. You know, shorts from here, you know, shorts from here, shorts from here, you know, and maybe you know, I take a loss in here. Maybe I'm holding this. Maybe I take it I take it from here, and then price, I mean, and I'm expecting this to get taken, and then I take a loss in here. But then you know, I'm good enough to realize what happened, and then to take it, have the confidence to take it from here. You know, that's what I kind of want to do. I want to lose, and then I want to win, and you know, have the confidence. But ultimately, yeah, that's kind of what I'm looking to try and achieve. But to be honest with you, I don't have the time to do it. But that's the goal, I think, because I enjoy this style of trading a lot more, and it's a bit more exciting, to be honest. Like swing trading on the 4 hour, taking a 50 pip stop is just, it's dull, isn't it? You know, who wants to do that? It's long, it's frustrating. Yeah, anyway, but that's it from me. Just to walk through last week's price action, and just a good example of how you can really mess up one week and come back the next week, you know, quite strong, and not to let the down weeks get you too down, you know, because it always happens to all of us. You know, we all have little moments of weakness and little lapses in, you know, judgment sometimes. So, but that's it from me. I'm not going to drag it out too much longer. I'll probably do my weekly analysis at some point during the week for anybody that's interested. But I'll tell you now, I'm looking for shorts. So that's probably it. Maybe above this. But that's it from me. Hope you all have a good weekend, and I shall speak to you soon. Goodbye.